how's it going? And welcome to this free course. My name is Dennis Popivoda. I'm one of the co-founders and lead trader at primetraders.com. Now, I'm going to be your presenter in this course, and I'm really excited that you're enrolled. Make sure you grab a pen and paper because we are going to be going over a lot of very specific information. So this is completely free. You have nothing to pay for, but I'm going to be giving you very specific info of the way we trade. There will be a lot of information here, so let's start diving into it right away. Let me take you straight away to the slide and explain what will actually be covered in this course. But I'm really excited you're here, and I hope you learned something. Free course provided and powered by primetraders.com. Now, what are we going to be going over in this course? We're going to go over 5 specific things. Number 1 is our strategy. 2, the indicators we use. 3, very specific mindset tips. 4, regular actions to take. And 5, why you should be a part of the Prime Traders community. Now, when it comes to the strategy, I'm going to be going over exactly the way we approach the markets and how we trade, because there is 2 ways we do this. One is a very short-term approach, and the second term is a day trading approach, still short-term, but not as short-term and precise, let's say, as the very short-term or the micro strategy. Then as soon as we're done with this, I'm going to go over our main indicators and show you exactly how we find momentum and entries using these indicators. Then we're going to be moving over to mindset tips, because being a good trader or a great trader starts in the mind. Those 3 points will help you to start becoming a prime trader. But what's going to put it all together and hold it there will be the regular actions you take, because success is repetition. Consistency, in other words. Finally, if you're serious about being a real trader, I'm pretty sure we're the right place for you, because 1, we are obsessed with what we do. We outwork everyone in the markets. And number 3 is, well, this is the right place for you if you're serious about day trading. Anyway, we're done with the basic intro. Let's start diving into these 5 points. And yeah, like I said, pen and paper, start dotting information down. If at any time you have any questions, I invite you to either go on primetraders.com and go to the chat, or send me an email directly on Dennis, DENIS, at primedtraders.com. Let's get going. Okay, let's kick things off with what it takes to be a pro trader. Now, being a pro trader comes down to, at least that's what I believe, comes down to 3 aspects, and this is how we've designed the Prime Traders community. To become a prime trader, and primed, the definition of it is a person having the skills, knowledge, and readiness or information to act in certain situation, or to apply those skills, knowledge, and of course systems in a specific market environment for trading. So the first thing is, of course, the system. A prime trader has a complete trading system. This is exactly what we provided the Prime Traders community, but you will also learn this in this course. So it's not one of those courses where, I'm going to give you bits and pieces and until you pay us something. No, you're going to get a lot of information here, things that we actually teach. Number 2 is mindset. So a positive, goal-oriented, and focused mental attitude. That creates mindset. And finally, habits. Good deeds done regularly. I'm going to go over my habits in this course and show you what I do on a daily basis that helps me to stay prime. But while we're here and talking about what it takes to become a professional trader, let's dissect the system. So what is a complete system? A complete system is one that tells you how are you going to trade, what are you going to trade today, when are you going to trade, so when do you enter, what is your definite entry process, how do you find a take profit, how do you exit early, and things like this. So all of that creates a complete system, and a person needs to know all of these things in order to actually have a complete system. So it comes down to content, gathering the specific content, applying the content and learning it, which turns it into knowledge, and then by applying this knowledge you turn it into know-how, and that's when you really know a system. Finally, mindset. Now, when I say a positive mindset, I don't mean just, I can do this and blah, blah, the motivational stuff. Even though vital, like Zig Ziglar says, motivation is like bathing. even though it is not mandatory, it comes highly recommended daily. So a positive mindset. You need to be positive. It's, you know, it's always better being happy than unhappy, right? Goal oriented, a person that has goals and works towards those goals. And finally, a focused mental attitude. So what do I mean by focused? A focused person knows exactly what they need to do. They operate like, let's say, with a checklist. They know that come morning or come to the trading station, they know what they need to do. So that's, for example, map out the key levels, which I'll show you, find momentum movers, and then build a watch list around this and a basic trade plan. And habits, these are repetitive actions that you do every day, like working out, brushing your teeth, eating, having a shower. Those are all habits that keep you clean and full in terms of food. You're not hungry. But yeah, we're going to touch base on a lot of these things, and even though this course will not be very long, it will still explain all of these 3 points in detail. So I hope you're excited, and like I told you already 2 times, I'll tell you once again, grab your notepad because you're going to learn some very important information here. Let's move over to the next slide. Now, the primed trading system. Essentially, there are only 2 ways that we trade. 1, key levels of our watch list, which comes down to day trading or even short-term trading, and 2, momentum movers. In this lecture, I'm going to show you exactly how I map in the key trading levels, and then I'm going to show you exactly which websites I use to find momentum movers. So I'm going to show you exactly how all of this is done and the way you too can find trades using the prime trading system. In the next lecture, I will actually break down our indicators, the ones we use, and show you how you can apply them to your TradingView charts and also find trades. Now, to successfully apply our system, you're going to need an understanding of chart patterns and candlestick rejections. I will be brief in my explanations here, but there is an excellent website where you can learn these things, such as babypips.com, or a simple Google search of Forex chart patterns, or just chart patterns, and go to images, and you're going to find a lot of them. And then you basically need to learn how to spot these patterns. Okay, so to explain the prime trader strategy, what I need to do is go over to TradingView. So let's go there now. So here we are, TradingView. If you guys want to get our indicators and you have the Pro or Premium TradingView accounts, you can simply use this link that I'm going to actually add to the section of where you're actually watching this course, and you're going to find the link. If you press this link, you're going to be able to copy our strategy, basically copy the indicators by clicking on the link, and you'll have all of the indicators we use. I'm only going to talk about the 3 indicators we have here, the EMA set to 13 and the 4-hour chart, pivot points set to the weekly and Fibonacci, and Viva set to the session. More on this soon. But a very basic approach of the way we trade comes down to the following fact. What we do is, in terms of this trade, for example, that we have long gold, what we do is we map key trading levels. Okay, we find key trading levels on an asset, and also key rejection zones, such as this over here. And then we wait for price action to do one of 2 things in order for us to enter. Either show us a pattern on the short-term charts, or give us a Fibonacci entry or Fib entry based on the prime trader system. Now on gold, we've got this trade, by the way, we had both of these. So let me show you this. Price action has created a rejection zone here. You can clearly see this. Resistance, 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 resistance. Now price came right back down here, and if I use the current high, which is this up here, and the recent low, so current high, recent low, I get these layers of fibs. Now 30 and 38.2 have lined up with this here. And if I use multiple time frame analysis, which is something we use at primetraders.com, at this dip, this is a 1-minute chart, by the way, and this is a 1-hour chart. At this dip over here, this dip that you guys see, price action gave me a low. Sorry, 1 sec. Price action gave me a low, gave me a high, a lower low, a higher high. Now, based on this is a sideways head and shoulders pattern, and price action made a push towards the upside. So let's say I missed this entry, even though I didn't. let's say I missed this entry, price action gave me a current high, which is this, and a current low, or a recent low. So high, low, and then I got the second layer of fibs, which actually line up very beautifully. And let me show you this a little bit better. Top, top, and bottom. And this level here, this range of 30 and 38.2, lines up with previous rejection levels. Rejection, 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 and rejection, giving me a second indication to take this long. What price action is doing now is telling me to hold on to this because we have come to a potential resistance, which is this up here. We did reject it, but we seem to be building another entry right now to go long again. So I already have this trade open. I'm going to show you. Let me just show you this now. Here it is. There's the trade. There's the entry. There's the take profit at 1236. Now I might get out of this area here because that pink level is actually 1740, which is our current resistance level. And you guys can see that level specifically acting, or that range of a level acting as a potential resistance. So I will try to target the upside, but if I can't, I'm getting out at 1740. To do this is very simple. This is a strategy that I apply all the time. I have created these levels. I have these levels mapped in by using the fixed range volume, which I'm going to show you how to use in a few minutes. For now, I will show you exactly what I do. I base my levels always on plays. This is the current high of the recent market momentum. Since I'm a short-term trader, all I care about is the recent momentum. So in my book, this is play A. And play B begins over here, where the short-term trend changed to bullish. So if I remove all of this, all I need to do is take the fixed volume range, which you can find over here, take the first red candle, which is the indication of the bearish move, drag it to the front. By doing this, I get volume. Since the price has moved a little bit, there's the upside. That's exactly what we're targeting, 1740, right there. Okay, the middle level and the bottom level of volume. So if price cannot hold this gains, I might look for potential shorts to target 1724, 700. So I do this, map this in, and then come here, and the first serious indication of bulls comes with this green candle right there. Now that I have this, I understand that there is a potential rejection over here because the value area of volume, you're going to learn this soon, the value area of volume is up here giving me a potential rejection, which tells me that a smart thing to do is to lock this trade in. Because you guys can clearly see there is a rejection and rejection. But on the good side, on that 1 minute chart, we have a potential continuation. Still, I cannot risk it, so I'm locking this trade in, or I can even take a partial profit or a full profit, or lock in and turn on TSL. There is many ways to manage this trade. But because of what I see here, I'm deciding to lock this in because, again, there is a decent rejection level here and here. You see this? There. So rejection, resistance, support, resistance. Very important. Now, once I do this, I have all of the key levels, and then once these key levels are mapped in, what I'm looking for is potential rejections. Rejection candles where price action could reverse, such as this, which we're using now, and this, which we used for our entry. So if price breaks below this, all I'm going to do is wait for a potential pullback, add my fibs, get into a trade. More on getting into a trade soon. I'm just showing you a live example of a gold trade. I'm not going to go over many more trades and explain to you exactly how all of this works, but I will go over one more asset, and that's GBPUSD. GBPUSD is at the fibs. Oops, as you guys can see, let me show you. It has a top side up here. It has a bottom level over here. And then we have 38.2, which lines up with this rejection zone. And if I zoom out, there's another rejection zone. So this tells me that there could be buyers at this place because there were sellers here and here. Then we broke out of this, and these sellers might turn into buyers and price could begin a bullish push. Now, I do not just enter because of this. if I open up my 1-minute chart, you guys are going to notice a potential contraction of price. A contraction of price is a very important pattern that I look for. It's wide at the top and tight at the bottom. And that tells me that there could be indications of bulls. Other patterns to know is double bottom, triple bottom, or triple top and double top, head and shoulders, and reverse head and shoulders. So this is a head and shoulders and reversed head and shoulders. Contractions, and other important patterns which you can learn online for free on babypips.com. My job is not to teach you the basics of trading. If you're serious about trading, you're going to invest time into learning the basics yourself, and you can do that for free on babypips.com. These patterns are very important, and when key levels, fibs, and patterns meet, that is exactly when we look to enter trades. Furthermore, you guys can clearly see a potential head and shoulders building on GBPUSD, which now increases the potential of further upside. So those are the two trades I have right now. Today is the 6th of April 2021, and these are the trades I'm running, and the reasons I've entered those trades are clear. We are going to come back and touch base on the system soon again, but for now I want to educate you on the indicators we use. So let's go back to the PowerPoint and I'll explain them and dissect them one by one. Okay, so let's talk about the indicators we use. They are 5, and you're going to find them all in the link right under this video. There is a button, a black button. Click it and replicate the videos right to your trading view. But keep in mind that to have more than 3 indicators, you need to have the pro or premium versions of TradingView. Now, let's talk about the indicators. 5 of them. 1. EMA set to 13. Now, the EMA set to 13 is used as a short-term trend indicator. I'm going to dissect each indicator soon when we go back to TradingView, and I'll show you exactly how they're used. Number 2, the Dow Chain Channels, or DC, set to 30 or 45, depending on the time frames you're using and depending on what type of trades you're entering. The DC is used for mapping key trading levels. Now, the Viva set to session is used for 1, as a breakout indicator when the EMA crosses with the VWAP. So number 1 and 3, when there is a crossover, it indicates that there could be a breakout, and based on what we see on the short-term charts, we execute trades. Number 2, it is used as a mini trend indicator. When price is above it, it tends to be bullish. When price is below it, it tends to be bearish. The VPSV, I only focus on the point of control, which is the POC. It is used generally for profit targets and entry levels. When price approaches those levels or taps them or rejects them, there could be an entry, but again, connected to the short-term time frame. 10 minutes, 5, 2, 1, or tick charts. 5, fixed range. Now, the fixed range, which I showed you earlier, is used to map key trading levels of the recent plays, specifically play A and play B. What we're going to do now is we're going to go back into TradingView, and I'm going to dissect these indicators and explain how they're used. Do is delete everything and start shutting down the indicators one by one and just leave one of them in there. Let me just remove this. Hide. Let's start with the 13 EMA. Now, the settings for the 13 EMA are pretty simple. What you need to do is put in the 13 EMA. So an EMA, you can find the indicators up here. Or again, if you just click on that button below this video, it will replicate everything. But the indicator time frame is set to 4 hours, the length 13, source to close. Now, this is a short-term trend indicator. It's up to you to decide whether we are in a range, as we have been here. That indicator more or less becomes worthless when you're in a range. So you're looking to trade key levels. Rejection becomes a resistance, rejection becomes a support, and so forth. We'll talk about that later on. I'm talking just about the indicators now. But once you map in your watch list and understand that there is a support here, and what's happening is that the lows or the highs are actually going lower, such as this. You have a major support level here. This is a range, but it's a bearish range, with the highs getting lower and lower and lower, and a clear-cut head and shoulders pattern right here. Price moved below the EMA, came pretty much close to the end of this bearish contraction. Price moved below the EMA, retested the EMA, and a bearish cycle has begun. Price creates a head and shoulders over here. This is why you need to trade what you see. Price moves above, and then each dip down below has become a buying opportunity. Very simple. The EMA 13 is used as a short-term trend indicator. We have it set to 4 hours, and we use it on all time frames below the 4 hour. Next, the Dow chain channels. Once you turn on the Dow chain channels, and specifically here I have them set to 30, and I do not have the middle nor the background. The Dow chain channel is used for specific key levels. And if I fix this up like this, what you're looking for specifically is when price creates these straight lines. These straight lines of the Dow chain channel, to me, mean that price has come down with force and gone away from that level for some time in order for the Dow chain channel to create a straight line. A previous straight line becomes a rejection zone or a resistance or support. All you need to do to map these levels in is use a horizontal ray, tap this in, and you can clearly see that this level here, which has been a rejection, becomes a support, fake out, support, 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 breakout, sell-off. While on the opposite side, you have a straight line here, for example, where price clearly moved above it over here, but eventually reused it here, here, and here. While this next level, right here, becomes a clear-cut resistance, and if you combine it with rejections, which we're going to talk about in the near future, you will see that that level has actually become a key resistance. Now, why didn't I map the top side? Because the rejection is here, tap, fake out, resistance. The same goes on and on and on as price moves. As you can see, there is a clear-cut straight line here. After the breakout, support, support becomes breakout, support, support, support. This is what you use the Dow chain channel for. Let's remove that now. The VPSV, which is only set to the POC, and the POC is extended, all of the other value areas are removed, and we get these straight red lines. These straight red lines represent the highest point of volume for a specific day. For example, this is for the 30th of March. The highest volume traded for the 30th of March came right at this price, 1685.545. The next day, price redoes the same thing and moves above it. If the POC is above price as is now, it indicates there could be bearish pressure. But we can clearly see a lot of support in this range, which we actually used today on gold, and we're moving up. If we break above this POC, the bullish trend can easily continue. That is what the POCs are used for. In untested POCs, if price starts moving heavy down, it indicates that this price range right here could become a support level. Profit target or entry. Moving on to the VWAP. I forgot to mention the pivots, but let's go over the VWAP. The VWAP is set to the session, and we remove all of the other bands. This is a short-term trend indicator. Like I said, if price is moving below it, it tends to be a bearish move. If price is going above it, tends to become a bullish move. Here we had a range yesterday. You need to be able to identify ranges, and it's actually a very simple process. And you can clearly see that price is pretty much battling this range. The middle of the range, the top of the range, the bottom of the range. Gold is in a range. This indicator can provide us short-term trading opportunities for longs and shorts. As price moves from one level, we could target the next level or any previous rejection zones like this. Now, let's connect the EMA and the DC. When the VWAP. When the EMA is above the VWAP, you can see a clear crossover over here and a strong bearish trend begins. Crossover here, bullish trend continues. The same goes for everything, but these kind of indicators become worthless in a range. You do not use them in a range. Hence, you turn on the Dow chain channel and you start looking for any key levels where you could buy and sell based on these indicators. When price is above them, you could look for short-term buys. Prices below them, look for short-term sells. But ideally, you would like to wait for a potential rejection level, such as this. Price rejects it, you start looking for shorts in a range. EMA, Viva, worthless. They do not help. They help in momentum moves. Finally, there is one more indicator, and that's number 6. I didn't mention it, and that is the pivots set to the weekly and only for the current week. We can see that price action has these following levels for resistances, supports, and if we are above the pivot, it could mean that we are in a bullish market, telling me that I should be looking for potential longs on any short moves down that could meet with a potential fib entry. There it is. So any push towards the downside, like 38.2, which you saw me buy, becomes a buying opportunity. If price starts going below the pivot, we could look for shorts because we will be below the EMA, and there could be a crossover between the EMA and the VWAP. There is one final indicator, and that is the following: fixed volume range. The way you draw the fixed volume range is based on plays. The plays occur with recent highs and lows. Play A is this high, play B is this high. This is all I'm focused on. So if I take this current high here, drag it to the front, I get the value area. The value area is this highlighted area. This tells me that gold could move between this range, but if it is to go down, it needs to clearly break this key support level. A big spike in volume. To learn more about our indicators, you can check that on our TradingView channel. There is, and on our YouTube channel, you'll learn much more about them, but this is what they represent. This is what we use them for. And for example, with Viva, fixed volume range, I could drag it over here, and then I'll get this volume range level. If I go to any other pair, like Euro USD, I'll show you how this is done. The last move that price made on its continuation, so this is a move, correction, continuation. This is A, and this is the bottom, which is B. What I would do is take that first major red candle, drag this forward, and I can clearly see that Euro USD is at a potential rejection zone, telling me that there could be a bit of a sell-off towards the downside. This is what Euro USD is saying so far. If I drag this to this green candle here, now I can see that the value area for Euro USD is towards the bottom, which tells me that yes, in fact, we could see a bearish move on Euro USD. So I hope this helps. Let's go back to the PowerPoint and I'll explain more. Okay, so we've gone over the indicators, the EMA, the DC, VWAP, VPSV, fixed range, and even pivots. I've explained how they're used and what they're used for. There's still so much for you to learn. So what we're going to do now is incorporate these indicators and go to the way of trading. There is 2 ways. I've already explained this. Key levels, which is the criteria. The following criteria is required. 1, have a watch list. 2, map all the key levels of the watch lists play A and B. The second way of trading is momentum, and the criteria for that is to find momentum movers using FinViz or bar chart. And also, once you find momentum, all you're looking for is to buy the dips on a bullish run and sell the swings on a bearish run. What I'm going to do is dissect these 2 strategies, showing our indicators and showing the way of trading. So I'm pretty sure this is going to help you. But again, if you're not following and understanding everything, it means you lack a little bit of knowledge when it comes to specifications of trading, patterns, key levels, and things like this. So if you're facing problems with this, I invite you to send me a message or just go on the chat on our website. I'll get it on my phone and I'll get back to you right away. If not, I would like you to send me an email and I'll get back to you there too. But anyway, let's go back to TradingView and let's start going over the way of trading and start explaining the indicators in more detail. We're back at my TradingView and it's time to go over the first way that we approach the markets, and that is trading pure key levels. Now, there is a few ways to find key levels, and I would say that I've already explained the 2 ways. There is a third as well. So the first way is mapping the key movements of a market. Let's go to NZD/USD, randomly to a different pair. So NZD/USD has made 2 major moves so far. We have this top, where the bearish trend started, and then this bottom or this double bottom where price action found support, specifically starting with this one. So this is play B and play A is up there. The way to do this is to grab the first indication of the reversal, which is this red candle, and drag it to the front of price. Based on this, we get the volume structure. Now we're using the fixed range volume, which can be found over here by clicking this arrow, going to the bottom, and you can also star icon it to have it as your favorites. These levels here are the most important when it comes to price action. Okay, the top level, this level, and there is a hefty move between each and every one of them, by the way. So this one, which lines up with the pivot, and then this one. So once I map these levels in, I understand the structure of the volume move when it comes to the first move of the market. You can already see how effective these levels are, with price using this one as a resistance, eventually breaking out of it, this one as a support here, resistance here, potential fake out, and the bottom one over here, which has been a support and resistance a few times. Correct? Very correct. Now let's grab the next range, and that is this level here. We'll start with the first indication of an up move, which is this first green candle. Now once I do this, I get the inner layer of volume of price. So then I map this in. So now again, clearly you can see how important this level is, with it being a support and resistance numerous times. I don't have to get this one because I already see this one, but I could grab this one over here as any short-term potential profit target. So you can clearly see the importance of this level by it being important towards the left and towards the right. Meaning, once price comes to these levels, what I'm going to do, now the first thing I do is map this, and then I can also take it a step further by removing this, and of course all of these are red little levels, so we can have a cleaner chart and so I can show you what else is important. Okay, now we can turn on the DC, and you can clearly see the important structures of the Dow Chain channel, with most of them already lining up to the existing levels that we have. So I don't really have to map in more over here, but I could grab this bottom layer here, which has been an important resistance, support, and then more or less of a support over here. To keep my chart clean, I'll switch off the Dow Chain channel. We can already see that the EMA and the Viva are crossing towards the downside, showing me decent bearish pressure. But we are at a key level. So all I need to do now is open up my multi-chart window and have a look at this. We can see that there is already a potential head and shoulders building, correct? Potential, I say. So we need to wait. We've got the fibs over here, and we have our first indication of an entry. So we are at a key level, and that key level tells us that there has been a rejection at this zone, which tells me I could look for a potential long, but I need to wait and see how this develops. But there is another way to approach the markets. So if I open this up here and go to NZD/USD, let's find NZD/USD, there it is. And I'm using the tick charts over here, by the way, so if I go to the smaller tick charts, like 50, I'll be able to see this a little clearer. So I can see that there is a potential head and shoulders. I'm expecting more bearish pressure, but this could be a correction in this move. And I'm going to have a bit of a higher exposure because my SL is pretty tight. Entry, SL, entry, SL right below this, just 4.5 pips. And then what I'm going to do is I'm going to target this range up here. So essentially I have a 2+ risk reward, risking 1.3 for 3.4%. Then all I need to do is release this alert to my community. I'm in the trade. There's the alert. It has gone out. The trade has been taken, and my community knows that this trade is live. So we have good indications of taking this trade, and there is a good reason we took it. Even though the trade might fail, the potential of it exists because we have a potential head and shoulders. We have a clear-cut criteria to go long with price action using this level as a rejection. That's 38 and 38.2. We already have some signs of a support, but we are in a strong bearish move. So that's why we're only targeting a short-term setup, a very short-term setup. How did we find this trade? We found a key level, and we use multiple time frame analysis to get down to that key level. We found the head and shoulders, which lines up with the previous resistance, and that's all that matters now. We are taking it long with a potential of taking it short again when it comes to the next level. So I hope this explains things to you a little bit better. We have the pivot point, we have a clear-cut support level, which has been a major rejection in the past. We have had 1, 2, 3, 4, and in 1 minute, 5 hours of selling, and maybe some relief is due. We are at a key level, we have an indication of going long, and we've taken the trade. Pure and simple. So that's the first one. Now, the basic points of this is number one, map in the key levels, and I usually do it on TradingView. I look for any volume levels of the play A and play B that I map in. Once price comes to those levels, I look for patterns as this one, connect them to the fibs, and look for entries. That increases my chances of success. Even though this is not 100%, it significantly increases the potential of the trade working out. I use the fixed range volume of play A and play B to find levels. I use the Dow chain channel, yet I also use candlestick rejections, such as this over here. Price rejected this level right there. That told me that this level could be important. Price rejected this level before, once, twice, tells me that maybe there might be some relief to the next level, and then we'll recheck the charts when price comes there and look for another entry, either as a continuation long or a trade towards the short side. But in my effort to show you how this works, I'll let this trade run, I'll let the recording go, and I'll let you guys see and judge for yourself if this trade worked out or not, and I'll see you in a bit again. Okie dokie, so I guess you guys saw the take profit hit. That was the trade. Again, remember, everything lined up. Key level, and we got a pattern. And then we connected the fibs to this and we got ourselves a trade. So I think I've explained one way of trading. It's key levels, the way I've shown you to draw them, and then you connect it to patterns and to the fibs. Let's move over to momentum, and hopefully we'll find the trade there too, and I'll explain how that works as well. Okay, so we're back at TradingView, and what we're going to do now is look for a momentum-based trade. Now, there's two websites that I use for this. One of them is this, which is bar chart, and you come to the Forex market map. And by doing this, you see the main Forex movers based on the major Forex currencies, which is the Euro, JPY, Swiss franc, USD, Australian dollar, British pound, Canadian dollar, and NZD. Clearly, we see that the NZD is the weakest one right now as things stand, but we still made a decent profit, didn't we? Right? We bought that, and we could have made an even bigger profit on it, but that's fine. So we can see that the euro is one of the strongest pairs, with NZD being one of the weakest. So all we need to do, my good friends, is go to NZD, euro NZD. But before we go there, I've actually just entered a trade, and that's this US 30 short. Now, the reason I've taken it is I was late to enter on the first indication, so I bought it on the entered short on the second one. But I'll explain why. You remember when I told you that the VWAP can be used to enter trades? Well, as you guys can see, price moved below the VWAP. And if I take our fibs the way we draw them, and that is for a short, I take the current low with the recent high, and I get this, right? 54. Right there. So that's one of the reasons I entered. While taking it a step further, I have an indication to go short here, and I'll show you what I mean. We have 4 rejections lining up to a key rejection level. So I'm taking this down to this level here, which in reality is this volume level. So price started going up from this candle, started its bullish trend, and I can see that there is a major uptick in volume over here, and pretty much an untested level right there. So I'm thinking, low, high, lower high, or double top, lower high. I'm thinking maybe a push down here. That's why I've taken this. So again, Euro NZD. So we see that Euro NZD has made a major break right now. And the only way to trade this, and the simplest way to trade this, would be this. So we would have to map in our levels, of course. Now we know that we are at R1, which is resistance 1 of the pivots. We know that there is a major resistance here, which is now turning into a support, by the way. So all we need to do is buy the dip. It sounds simple, but let me show you how we're going to do that. So we're going to scan these markets over here, check what's going on, turn on our Dogechain channel, take this top, take this bottom, and we already missed an opportunity to go long. So we got 61.8, and right here, there is an indecision candle. An indecision candle in my books is when price makes a high, makes a low, but has a body in the middle, right? Not a doji candle, but an indecision candle. And they are excellent to go long. So since we don't have an entry yet, what we're going to do is we're going to wait for a potential little pullback in this market and take it long. Our next long level can be R2, or we can actually take the top here, volume, and get the first indication of downside. No rush, by the way. Once we come to the mental tips we're going to be talking about, you'll understand how patience is a valuable skill. So yeah, we see that the top side, the volume is up here, and that lines up more or less with the R2 resistance of the pivot. And then we have this one here. This is what we're going to target. So we're just going to prepare for this. Going to go Euro, NZD. Where are you? There you are. Euro NZD. So I'm going to set this level in here. And because we're not far from it, or not far from the C there, and price could make a significant push, by the way, because it has made higher lows, we could make a direct market order. So I'll just go with 2 lots on this one. Direct market order below the previous low, which is about 22 pips, and then we're going to go all the way up here. So our risk reward is not ideal yet, but we're going to try and build this position up. How am I going to do this? I'm going to wait for a potential top when price starts dipping down, and I'm going to set my fibs based on that top and the recent low, and then I'll re-enter again. So that's the idea and the plan, but now that I've zoomed in, I see this low over here, so I can lower my risk even more. And here is a potential retest zone where I'm going to build up my position to 4 lots, and the same SL and the same TP, since I'm not using all of my buying power. But the idea is pretty simple. So there is a website called barchart.com. You can simply go on that website, or if you join our community, you'll find those links everywhere, or you can just replicate this. This changes with time, so you need to come here so we can see that the momentum is the best on bar chart, indicating that Euro NZD should be going up. Like I said, we already missed the potential entry, and we know that this entry lines up with key levels, so it looks pretty good for a long. That's why I'm thinking we're on the right side of this market. But anyway, if it goes down, which I think it most likely will, we are going to get tagged into this, and we're going to increase our risk-reward ratio even further. I guess that's pretty much it for this strategy. I'm not going to look into other pairs. I just explained to you clearly. I use the exact same analysis process, the same patterns, the same everything, but the type of trade we enter might differ. This is a momentum trade. So any pullback down, I'm going to enter as long as there is indications to enter. We are a little bit late for this one, but that's okay. Still entered it. It looks good. Sometimes you just got to risk it. But as an overall, this looks like a perfect setup. I think that Euro NZD has good potentials for upside, but because I don't have the value of time right now, I need to finish this course so you guys can have it and enjoy it and learn something from it. I'm not going to show you the actual outcome of this trade for now, but if you really want to know, just reach out to me and I'll send you the transaction statement and we'll see if it worked out or it didn't. At the end of the day, as well, you need to be thinking in terms of probabilities. I don't depend any trade is going to be a winner. If I did, I'd be going all in on every trade. I expect trades to fail sometimes, and that's why I use structured position sizing. Something you can learn more from on our TradingView channel. We release a lot of videos there, and on our YouTube channel. But if you can financially afford it, you can just spend €9.99 and join us on a 7-day trial and get access to absolutely everything. But anyway, I guess we're done with the two approaches. Like I said, one is a momentum-based strategy and the other one is just based on your watch list. Let me take you back to the PowerPoint and I'll start explaining how all of this works more. Okay, so now that I've explained the way of trading, well, the two ways of trading via the Prime Trader system and exactly the strategy we teach people to apply every day in the financial markets, we can go over some mindset stuff now. Now, before I go there, I need you to understand that the momentum-based strategy and the key level strategy can be applied to every time frame. And essentially what we do at primetraders.com is we just look to make a daily profit. We really don't care about spending 9 hours on the charts. I'd rather spend an hour on the charts, make a couple of grand, and start coaching people or play with my son or take my wife out. So I want to enjoy life. That's the purpose of trading. Because in reality, trading gives you the free freedoms that very few businesses can only give you. And that's the freedom of time of work, when you work and how much you work, freedom of where you work from. You can work from your office, from your home, from your car, from the beach, from anywhere. And finally, the amount of money you're earning. You're in the direct control of that. This strategy helps you to achieve structure and helps you attain those goals. Anyway, let's continue. Mindset. Now, having the right mindset is vital in trading. Yet, this is not something you get once. This is not something you just get once and keep forever. A mindset is created daily, and even little steps in the right direction can actually yield massive results at the end of the quarter, at the end of the year, week, and even day. Your point is just to be consistent in them. So I'm going to go over 6 mindset tips that I think are vital, and they are the backbone of our trading system. Number 1 is patience. Why is patience important and not intellect, for example? Well, if intellect was responsible for trading success, you would have doctors, teachers, and other smart people who would be dominating the markets. But they don't, and that's a fact. I worked in the financial markets. Most of my very wealthy people or very wealthy clients have all lost money, drastic amounts of money, because it's not intellect. Because in trading, success comes down to emotional discipline. And that is not taught in schools. It is a skill earned from practice and application. Patience is a vital component of any trading system. What I showed you on that trade on NZDUSD, that is called patience. Price comes to a level, you don't rush. You wait for more in the information. And that information comes pretty quickly on that shorter term chart. Either on the ticks or the 1 minute, you'll get it. Patience. Valuable skill. Now, the second one is consistency. The goal of every trader is to take the best trades and to do that consistently. Money is just a byproduct of taking the best trades. Because at the end of the day, a real trader looks for consistency, while a gambler, well, he just looks for a quick profit. When you're consistent and you're patient, you're actually developing the third most important skill, and that's discipline. Let's talk about discipline. I think it best comes down to this quote: suffer the pain of discipline or suffer the pain of losses and regret. You need to know this. No profession requires more hard work, more patience, and discipline than professional trading. And this will not be a walk in the park. You're going to have to get your hands dirty and really create the best version of yourself. That's why we're called prime traders, because we focus on this, on your mind. That's what we focus on. Next is habits. One day, all of this hard work and dedication will make you a millionaire. It's true. Just keep pushing day in, day out. Remember that you make your habits, and then your habits make you. So it is important to control your inner urges of over trading, everything else, like not being patient, not having discipline. You need to control those things, because the backbone of all of those mental skills are habits. It's what you do in your daily life that creates those habits, and then it transitions into your trading. The fifth one is belief. Believing in yourself is the first part of success. If you believe, you'll work hard for it. If you believe, you'll have the motivation in the hard times, basically resilience. And if you continue to believe, you'll be able to focus when you're losing and find that which is not working out in you by focusing, by simply believing. All of those things happen. But most importantly, you love what you do. And when you love what you do it with passion, hard work, and you never give up. That is when success and happiness comes to you. And finally, the last one, which is number 6, is confidence. And confidence comes from practice and application. In trading, confidence is not, I will profit on this trade, but it is fine even if I don't, because I know I'll profit on the next one. In this business, if you're good, you're right 6 to 7 times out of 10. You're never going to be right 10 out of 10 times. Remember that. Just clearly remember that. This is a game of probabilities and vital for you to know this. If these mindset tips have helped you, please start applying them. They are going to be the backbone of your success. Let's move over to the next slide. Okay, so things to do regularly. Repetition is the way to success at anything. In this lecture, I will share the 6 things that I personally do regularly, which if you replicate and apply to your daily life, will help you move down the straight line of success quicker. Number 1 is watch list prep. Every single day I create a watch list and I trade based on that watch list. I map in my levels, I do my work, I invest work into my analysis. In fact, 20% of my results in trading, 80% of the results in my trading come from the 20% of the activity I do in the markets. The other 80% of the time I spend on analysis, preparing my watch list, looking for key levels and so forth. So watch list prep is vital. You got to do your work in trading. You can't just find the magic indicator. Buy, sell, come on. It's vital that you understand that there is no magic indicator. And if there is, it's already been programmed to open its trades automatically and nobody's going to sell it to you. Number 2, momentum movers. Once I create my watch list, I also add momentum movers. I find the daily momentum movers, weekly is good too, and then I look to buy the dips and sell the swings, as I explained to you in my momentum strategy. 3, position sizing. I always know my exposure levels. So I know if I'm risking 10%, exposing, not risking, exposing 10, 20, 30, 40, or 50%. If I find a great trade, I'll go as big as possible on it. But my risk needs to be tight. And that only happens with a definite entry. Number 4, I literally write down my goals every day. Every single morning, I write down my goals. That's the first thing I do. I visualize them, I see them alive, And if you do this, this will help you with motivation and knowing what you're searching for. Where are you going today? When you have goals, you know what you need to work on. I speak a lot about goals in the starter course of the Prime Traders community. Number 5, development. I read a minimum of 30 minutes a day. Non-fiction books, trading, mindset, motivation, personal development. But development isn't only in reading books. It's also in sitting down and just charting without even looking for a trade. Let me explain it like this. It's the same thing like Michael Jordan going to the basketball court, picking up the ball, and shooting free throws. There's no game, but he's practicing. Cristiano Ronaldo goes in and starts shooting some penalty kicks, corner kicks, passes, sprints. He's training, but there's no game on. Why do you think that you shouldn't do that too? And most traders don't do that at all, by the way. They just think, okay, I'm going to sit down and look for trades today. It's the same thing like Michael Jordan sitting on the couch, drinking a beer, working a 9 to 5, and then coming on a Friday to play a basketball game with everyone. How is he going to perform? Not too well, right? Same goes for you. Development, vital. Finally, 6, workout, because health is the first wealth and your only wealth. And people only realize the value of good health when they lose it. So don't let that be you. Even small walks, stretching in the morning. You don't have to go full on berserk workout mode. At least some baby steps. They're going to help. So these are the things that I do regularly that actually help me get into a primed mindset. And I hope they help you too. Let's move over to the next slide. We've been at it for almost an hour, maybe a little bit more. Let's wrap up. This is going to be the final slide. I'm going to go over the last 3 major points that you need to know in order to become a professional trader. And this is something we teach. Now, number 1, you need to have a definite entry. Every single complete trading system has a definite entry. For us, that is the fibs. But the way we draw them, the way you saw me draw them on that NZD trade and every other trade that we went over. Number 2 is the way you think. Probabilities. In trading, there are no certainties. You will never know which trade's going to win and which trade's going to lose. Hence, you need to apply rule number 3 or tip number 3. Position sizing. At primetraders.com, we use an Excel to generate our trade exposure levels, but we're working on a C-Trader algorithm too that's going to show exactly the position sizing you should use depending on how strong the conviction is of your trade. Our exposure depends on how good the setup looks like. And then we use probabilities to our advantage. Of course, there is many other tips like having a definite exit, setting the right to sell, entries, blah, blah, blah. There's so much to this. But I think I've covered a lot and I think you learned a lot. So every trader that is successful and that is earning money in the markets has a complete trading system. And that's what I would like to, that's the main point of this course, explaining to you what it takes to day trade successfully in the financial markets. And that is to have a complete trading system. Now we've got one. And if you like it, you're very welcome to go on primetraders.com and register with us. Now, let's go over this again. Every trader that is successful and that is earning money in the markets right now has a complete trading system. A system that basically says buy because of this and sell because of that. In the meantime, it also says how much to buy, sell, when, what, and how much you should be buying and selling right now based on this idea. I would go as far as saying that if you cannot answer those questions right now with your system, you should not be trading and you should put all of your effort and time on creating a complete trading system. A really good read on that is Richard Dennis, and you'll find a lot of information about him, how they created their own system. And that's what encouraged me to create my own complete trading system, by the way. Now, a complete mechanical trading system is required to create an edge in the markets. Then, all you need to do is follow it. So, we're at the last slide, and I'd like to thank you for watching this course. Feel free to grab the trial, which costs €9.99 to go for 7 days premium. You get all of the features, no limitations. All you need to do is go to primetraders.com, or you can just go premium right away if you enjoyed what you learned here and want to learn more. Like I told you in the beginning, my name is Denis Popivoda. I'm one of the founders and the lead trader at primetraders.com, and I'm really happy you watched this. Thank you, and see you later.